Hello everyone, this is Andrew McNair from SWAN Capital with our informational economic update for October 2018. In this month's video, I'm going to be discussing major headlines that influence markets in September and also provide you insight into what these developments could mean for you as an investor. Now, as always, please stay tuned at the end for a required disclosure statement. We just completed the third quarter of 2018 and are now entering the year's final stretch. Between July and September, the S&P 500, the Dow, and the Nasdaq all gained at least 7%. In fact, the S&P 500 had its best quarter since 2013. However, last month's performance really contributed very little to these strong gains. And that's not surprising. Historically, September isn't a really strong month for stocks. In the past 20 years, the S&P 500 has averaged a 0.8% loss in September. So if we look at the major domestic indexes, the Nasdaq lost 0.8%. The S&P 500 gained 0.4%. So this somewhat tepid performance came despite both the S&P 500 and the Dow hitting new record highs during the month. As been the case really throughout 2018, trade continued to be a hot topic in September. The US and China both imposing more tariffs on each other. However, domestically, we had some good news. Mexico and Canada agreeing to a new trade accord to replace the old NAFTA agreement. These geopolitical developments generated major headlines, but really they weren't the main drivers of recent stock performance. Instead, investors focused on the fundamentals. September's news gave us a lot to think about, from housing to retail and more. But the recent data indicates that housing market actually may be slowing or peaking. As prices increase and inventories stay low, many buyers can no longer afford to purchase homes. The challenge is especially acute in these very large cities, which are driving some people to relocate or work from home. Reports also indicate that retail sales remained relatively flat. However, the pace may pick up again as we see these tax cuts and stronger labor market, meaning consumers have more money to spend. In fact, consumers are feeling very good about the economy. The final result for September's Consumer Sentiment Index was above 100 for only the third time ever. In addition, consumers' expectations for their personal finances to improve reached the highest level since 2004. Against this backdrop, Federal Reserve Chairman Jerome Powell said that the economy is quite strong. He noted that inflation is close to the Fed's 2% goal and target, and that the labor market is providing jobs that people actually need. So while we're going into October, we have a lot to keep our eyes on. We have to look at Italy's financial concerns, the upcoming corporate earnings season, both domestic and global. Just as stocks often drop in September, we have to keep our eyes on October because it can bring a lot of volatility, and the fourth quarter is often strong overall. So of course, past performance is no promise of future results. So our goal will be to analyze current circumstances and find opportunities for clients like yourself to position themselves for the future. That's it for this month's informational economic update. Once again, this is Andrew McNair from SWAN Capital signing off for the month of October 2018.